I'm Andres Valencia. I am the Executive Vice President at 21Shares. As part of my role, I oversee portfolio management, capital markets, operations, and also asset management technology. So as 21Shares, we are trying to make access to crypto easy. We are the world's largest ETF crypto issuer with a total AUM of about $10 billion globally. Run about 40 plus products internationally and in the US.
My name is Joe Medioli. I'm the head of the Financial Institutions Group here at Anchorage Digital, responsible for our businesses and services focused on asset managers and ETFs, wealth managers, and our Atlas settlement ecosystem. I've been with the firm coming up on 3 years. Spent the prior part of my career in the management consulting space and regulatory advisory space, focused exclusively on regulated financial institutions, global banks.
So my name is Rachel Anderica. I am head of global operations here at Anchorage Digital. And I'm also the Chief Operating Officer of Anchorage Digital Bank. My background is I actually came from the regulatory space. I started my career off as an OCC bank examiner. And so our OCC charter to me, is a real first of its kind. Really something that Anchorage holds out as extremely important to us. We've had this charter for about 4 years. It'll be 4 years, January 13th. And our track record is that we as a company have custodied tens of billions of dollars in assets. We have hundreds of institutional clients that we service that range anywhere from wealth and asset managers to protocols, ETFs, obviously, family offices, and other financial institutions. Our investors include traditional investors such as A16Z, Goldman Sachs, GIC.
Anchorage Digital was founded in 2017 by 2 security engineers. And what they built out over the last 7 years is a global digital asset platform providing institutional custody, settlement, staking, governance, and trading services to clients really across the globe. It is also somewhat unique in this space in that Anchorage Digital is home to Anchorage Digital Bank NA, which is the first and still only crypto-native federal bank in the US. It is also home to Anchorage Digital Singapore, which is authorized by the Monetary Authority of Singapore. And more recently, Anchorage Digital New York, which holds a BIT license with the NYDFS.
This was a conscious decision that Anchorage made when converting its charter from a state charter to a national charter. This is something that was extremely important to us to be able to be, under the black letter of the law, a qualified custodian. So as you know, within the black letter of the law, qualified custodians can include different types of financial institutions. One of those, most specifically, is a national bank. So not only from a legal perspective, are we a qualified custodian, but it also puts us on the same regulatory footing as many other of the players in this space, such as JP Morgan, Bank of America. We're regulated on exactly the same regulatory footing. Anchorage custodies tens of billions of dollars in client assets across a multitude of institutional clients, including wealth and asset managers, exchange-traded funds, protocols, hedge funds, and venture capital firms.
So as part of the investment management team's role, we are essentially responsible for running products on a day-to-day basis, ensuring that we provide our sufficient liquidity in the secondary market, monitoring essentially activity on the exchanges, as well as helping investors access our products in a safe and a compliant way. We are also responsible for trading on behalf of the products, as well as transferring assets to and from counterparties, and ensuring that our products reconcile and are essentially performing as we design them to.
I take the approach that a custodian is any entity that you use to safeguard your assets, right? Custodians, by the letter of the law, can be federal banks, they can be broker dealers and such. But the service that they provide is not just the safeguarding of those assets, but the provision of services to actually access those assets. So in digital assets, we have this unique case where we have very low latency transactions and a decentralized ecosystem. But the transactions are essentially immutable, right? You can't claw them back. So the job of a custodian is to not only safeguard my assets so that they don't get hacked and can't be used for purposes other than I intend, but it's also the resiliency and redundancy around those assets, and then the access to them. So can I trade them, transfer them, withdraw them when I need? Custodians operate in a number of different manners. There's a sort of traditional trade-off in this space between what we call hot storage, which is supposed to be very fast, but higher risk because it's typically connected to the internet. or cold storage, which is considered safer, but historically has been very slow from an access perspective. Different custodians take different approaches to these ecosystems. We at Anchorage Digital take a fairly unique approach in that we are a cold storage exclusive shop, but with an incredibly low latency infrastructure, really designed to support the accessibility required by, highly active institutional trading firms.
So Anchorage is regulated on the same regulatory footing as any other bank. And that is what is beautiful about our charter. We have to have the same Bank Secrecy Act requirements, the same Know Your Customer. We comply with FFIEC requirements on information security, on privacy. So anything that you would expect a large financial institution to be able to do, that's what Anchorage has developed. When it comes to the fiduciary care of assets, there are specific federal requirements that are unique in the federal space. Anchorage by law cannot commingle client assets. Our assets are segregated on chain. We must comply with dual controls and have quite a robust control environment to comply with regulatory standards.
So what we need to do is provide an institutional grade product. And essentially that means is ensuring this vision of responsibilities and proper oversight of all investment activities within our products. So we always try to build checks and balances within all the products that we manage. In other words, investment teams are not able to actually move assets, and there is always a third-party custodian that verifies and holds assets on behalf of the investor base of all 21Shares products. Our teams are responsible for utilizing third-party software to trade, essentially to custody our assets, and rely on essentially the expertise of partners such as Anchorage to provide those services for our investors.
One of the important things to keep in mind here is that our approach to custody in general is that custody should be separate from any execution service. So when we think about what cold storage means in a custodial context, right, it means your ability to keep your assets safe while still being able to access them from a settlements perspective. So just like in traditional financial services, when you trade, your assets are typically held at a bank or a broker-dealer or another custodian, and then you settle on some sort of set schedule. At Anchorage, we enable our systems to be able to display the assets that you have available, to engage with counterparties or with our own trading venues. So you can trade off of the assets you have in custody, but then we will facilitate the transfer and the settlement essentially as a settlement agent on your behalf. Doing so out of cold storage is a unique feature of our ecosystem. Historically, these could be 4, 24, 48 multi-day processes for early cold storage custodians. We use a combination of off-chain and on-chain processes to authenticate transactions. And then actually validate the intent of those transactions before we even pass them in for signing. What that means within our ecosystem is a transaction payload that is authenticated by our clients that we then pass on to offline hardware security modules. And we do so through a relay device. Those relay devices operate 24/7, 365. And what that allows us to do is pass transaction requests, but have all of the signing occur offline. So once that copper switch has removed access from the internet, then that private key material gets decrypted, signed, and then switches back on.
Over our 4 years as a nationally chartered financial institution, we have served hundreds of clients. We custody tens of billions of dollars in assets. We're backed by traditional financial institutions and major investors in this space, including A16Z, Visa, GIC, Goldman Sachs, and other, pretty large investors.
And the Investment Advisors Act of 1940 defined what a qualified custodian is. And per that sort of black letter rule, qualified custodians can be any one of a number of specific entity types. We are a federal bank, which is one of the particular entity types there. And so we are what we consider to be an unequivocal qualified custodian. What that means is that any entity that is required to comply with the 1940 Act, so investment advisors, many asset managers and fund managers are required to hold their assets within a qualified custodian. So satisfying that baseline regulatory requirement is one main component of this. Doing so as a federal bank means that we are also subject to federal banking standards. We are overseen by the Office of the Comptroller of the Currency, which is a part of the Treasury Department. And that means we are held to the same standard as other OCC regulated entities, such as Bank of America, JP Morgan Chase, and the like. That means a whole array of federal standards ranging from BSA AML, sanctions compliance, to business continuity, operational resilience, information security, and so forth.
So when you think about crypto, this is really a bearer asset, meaning that control of the asset is extremely important. Transactions on the blockchain are immutable. So essentially, whoever holds the asset is essentially responsible and has ownership over that crypto coin. This makes the operations on the crypto side a bit different than it would be for other asset classes, where you can recall assets on dollar assets on traditional banks. That's something that it's not available within the crypto universe. So essentially, when you actually transact or transfer assets to another counterparty, you need to ensure that that's being done in a compliant and accurate way.
Self-custody is sort of what we maybe traditionally think of as anything from writing your private key down on a sticky note and putting it next to your laptop to, burying a hard drive in your backyard. What that essentially can mean is you have full control over your assets, but you also take on that full risk. So when you think about, the difference between, losing your car keys and not being able to get into your car, but maybe you can call a police officer to come get that. You can't do that in crypto. You lose those private keys, they are lost forever. Nobody can access those assets. So you have full control, but you also have the highest risk. Exchange custody, very typical and common among, say, retail investors in this space, requires them to take on exchange risk, right? It is convenient from a trading perspective. You can get access to onshore and offshore liquidity that way. But again, you're taking on the counterparty risk of the exchange, as well as the sort of hacking risk of a large exchange. We know that there's been pretty notable events over the last 5 years on exchange risk. Custodial firms and qualified custody is really where you provide that sort of regulatory resilience compliance wrapper on top of the security piece. So you have a third-party firm whose job it is to safeguard your assets, provide you that resiliency and redundancy, and ensure that your assets remain bankruptcy remote, which is a very important part of our QC measure as well. So even if our firm goes down, your assets are your assets.
Yes. So crypto being on chain, there's an advantage to the on chain transactions, and essentially is that anybody can actually view what happens within wallets and the assets that are being held within wallets. Because of safety and compliance concerns, we don't share wallet addresses, but we do try to build transparency in of how we ensure that we have proof of reserves within our ETFs. So for that, we've actually partnered with Chainlink to produce a proof of reserves dashboard where we can actually pull balances directly from on-chain wallets and display them to our investors.
Authentication is really core to any custodial activity, digital assets or traditional financial services, right? You need to validate that the person requesting that transaction is duly authorized to do so. This concept of dual controls in the U.S. system in particular. Digital asset custodians do this in a number of different ways today, anywhere from username and passwords, video conference calls, to services that we employ here at Anchorage, like biometrics, transaction review, and other metadata before we even pass transactions to our hardware security modules for authentication.
So to ensure that we essentially safeguard the assets, we're basically employing a couple of different processes to basically safeguard assets. One of them being that we trade from cold storage. So we're always trading OTC, where we essentially settle on T+1 basis. In order to do so, we also whitelist addresses. That means that the addresses where assets are being transferred are whitelisted or have been approved by multiple people at 21Shares, have been tested. So there's test transfers that are being done to ensure that assets are not sent to wrong addresses.
We really built this from the ground up to service institutional market participants. These are institutions that require very quick access to their assets, but those assets can number in the billions of dollars, and so they need to be equally safeguarded. The way we do that at Anchorage is by first validating through off-chain essentially validation methods the intent of that transaction. But once that transaction has been authenticated and signed and passing our security, our internal security and risk reviews, we are able to very quickly move to on-chain broadcasting by passing authenticated transaction payloads through a copper switch to disconnect it from the internet and move it into our hardware security modules. Only then is private key material decrypted and used to sign a transaction, after which that signed transaction is moved back onto the internet for broadcasting. And what that basically means is that through their entire life cycle, private keys within Anchorage custody are never exposed to the internet. We really built our ecosystem from custody as sort of our base layer, and then the services we've built on top of that really function on top of that, like low latency security architecture we've discussed. Staking is one of those services. We offer a very comprehensive staking service where you can stake assets through Anchorage validators. We also have a program where you can bring your own validator partners into our ecosystem. What is unique about us, and is another function of our regulatory sort of infrastructure, is that staking is actually part of our federal bank charter. It is a custodial service. In addition to staking, we offer participation in on-chain governance, such as voting for certain assets that we support. And then we have trading offered through a number of different venues. We have the Anchorage Digital New York bit license, which is an agency trading venue. We have Anchorage Hold, which is another agency service. And then we also have offshore principal trading businesses that support these models. I think what is unique about this, though, is that we are able to package these services together to create really unique products and services for specific client types. So we support ETFs through a bespoke custody model. We support wealth managers through a combined custody and trading service that allows for a broad range of features, such as different account types, block trading, ability to subscribe to and execute against separately managed accounts. And more recently, we offer services around tokenized funds and securities, such as tokenized money market funds and stablecoin rewards programs, where through an affiliate, if you hold certain stablecoins with us, you can earn rewards in stablecoin as well. So we continue to layer services on top of our core custodial stack regulatory perimeter.
So staking is a key feature of crypto that investors are 100% interested in getting access to. It is one of the features that makes ETFs attractive. We currently offer staking products in our European suite of ETFs. Custody is essentially a crucial part of that infrastructure to be able to deliver that from a cold storage solution. It's essentially just going back to us delivering institutional grade product. So we will look to deploy staking ETFs in the future in the US once they're allowed.